Uh, okay, we are live.
Hey, what's up? What's up, Huobi users? Welcome to another episode of Weekly Market Chat. Nice to see you here. I'm your host, I'm Johnny. And hey, Ben, how are you doing?
Hey Johnny. Uh, Good. I think
Yeah,
recently market has been. I think for the past 1 week, nothing has been going on much except yesterday, right?
yeah, very
Yeah,
low volatility.
yeah. It was like very mostly we're trading sideways, so we slightly uptrend, and then yesterday's Joe Powell speech just maybe shocked the market a little, right? Yeah.
Yeah, yeah. And I think maybe we can start from Jerome Powell's speech yesterday and then going through what market is now pricing in and market's reaction to his speech. Do you
Yeah.
think actually did you listen to the speech? I actually can share a I think there's a highlight on Twitter, and I think that's very helpful. But
Sure.
wait a minute because I'm getting to the picture. So
Yeah. Mm, I mean,
people
maybe.
are saying actually the general, yeah, go
You
ahead,
go ahead,
man.
go ahead, go ahead.
People are generally thinking that the speech delivered by Jerome Powell yesterday was hawkish but not dovish. That's what I got from reading the tweets and also other stuff.
Yeah.
And there's even an article that says, let me share my screen, maybe. Yeah, wait a minute.
Yeah, but because
So,
I personally
yeah,
didn't listen to the speech yesterday, but
okay,
I mean
yeah,
I from what I read from the articles today, it's mostly hawkish, right? Yeah.
yeah, yeah. So basically, he said, uh, U.S. interest rates will likely peak at a higher level than previously expected due to stronger economic data. And I think we can start from here. So, Benz, what do you think about a strong economic data means?
Yeah, I
Does
think
it
what.
mean that we have strong labor market and, all sorts of data we talked about in the previous episode?
Yeah, I think previous episode we really talk about strong labor data coming, that came out in January, the non-farm payrolls that came in higher than expected. Consumer spending is high. I think in the earlier paragraph they highlighted it. So, and we know that high consumer spending means higher demand for limited goods. So definitely will push inflation up. So this is one of the things that he did say.
Yeah,
I think for other data would be the ISM data, the PMI data, that the surveys that came up last week as well. So I think most of them came in within expectation. Of course, I think the data didn't go above 50, right? So, but I think it's still strong because it didn't fall, uh, you know, below expectation. So I think this is what he meant by stronger data, uh, and strong labor market, and this is the reason why he thinks that raising higher terminal interest rates would be beneficial, or would, I would say, more bullets to fight inflation, right?
yeah. And in addition, all of these economic data are pointing to, inflation going not slowing down, but might be coming back at a stronger pace.
Mm-hmm.
And I also want to point out that, Jerome Powell, um, during the hearing before the Senate Banking Committee, he said, look at this. Like everyone else, we're watching what's been happening in the crypto space, and what we see is quite a lot of turmoil, right? We see fraud, we
Mm-hmm.
see a lack of transparency, we see run risk.
Yeah.
And this is actually not very good looking for the cryptos, right?
Mm-hmm.
Because um, definitely Jerome Powell is paying a lot of attention to crypto.
Yeah.
And in my opinion, I think crypto is actually a market, you know, a market where people would like to gamble, a lot of retail, especially because of, the high volatility and the underlying potential greater risk. And people would like to speculate there. And it's not a surprise to me if it's being treated um, maybe like a reference to uh, people's risk appetite. What do you think about that? Like retail's risk appetite, and that's actually, in my opinion, a kind of indicator to how's inflation doing at the moment. Because if people still have money to gamble and speculate in the crypto space, that means that people really have a lot of money. And if people are going to put money in crypto space, they would be willing to spend on other places as well. Just I'm making a very uh, maybe it's just my personal assumption.
Hmm. I think
Yeah,
I think from my opinion, what he meant, like the crypto space lacking transparency and fraud. I think lacking transparency. I think from our own opinion, and it's mainly from centralized bodies. It could be centralized exchange, which happen in FTX, right? And I would
yeah,
think I think for most of us like who are in this space for quite some time, actually everything is really transparent, right? Uh, whatever that uh, whatever transaction I had on my wallet is all recorded in can be in the ledger, can be in the explorer. You can track my transactions. It's very transparent. I think what he meant is on centralized bodies because um, in traditional finance, uh, there's a lot of protection for information, right? So
yep,
you talk about insider trading, talk about public data, public information, all this. But in crypto space, all these are going really, really fast. Like
yeah, really, really
things
fast.
things can change within a day or within maybe even a week compared
Yeah,
to traditional companies. you know Maybe they have a press release maybe once a month, or they have annual reports or quarterly reports every quarter or every year, right? So
yeah,
I would think that it's moving relatively slower than crypto space. So
yeah,
what he meant by lack of transparency, because there's the public data or information just flows too quickly. People may not even catch it, right? It's not published on the news. You have to do your own reading, do your own research on
yeah,
Twitter, on this kind of open platforms to
yeah,
find this information.
yeah,
Because from what
exactly.
I think for both of us, we know that this information are all readily available. You just have to do your own
Yeah,
research, right?
yeah,
Yeah,
that's right.
I
Yeah,
think probably what he meant is the regulation of information flow, right? Yeah,
yeah,
because
that's right, man.
if I'm a VC and I invested in the project in early stage, and when this project get listed, of course I want to I want to have exit strategy, right? I want to exit from this investment maybe 100 times, and that's my profit, right?
Yeah,
I think a lot of VCs, or maybe it's centralized bodies, are going to in this crypto space because I wouldn't say it's easy money, but the payout is higher than traditional companies, right?
yeah, right. Yeah, yeah, right. And so generally now for March, uh, you know, market is no longer expecting a 25 basis point rate hike in the coming FOMC, right?
Yeah.
I think it's very obvious right now.
Right. It's very obvious. Okay, just give me a moment. Let me share my screen. Right.
Sure. Go ahead, man.
Right. Okay. So, just a moment. So, okay. So I think we recapped about Jerome Powell's speech earlier. So
Yeah.
yesterday when it was released, uh, the three major indices in which is a DJIA, the S&P 500 and the Nasdaq, they were both down 1.7, 1.5, and 1.3. because this means that it's very bullish for DXY, because high interest rate means a stronger US dollar, right? So this
Yeah.
definitely uh, mm, one thing that investors is a risk off moment for yesterday, and right
Yeah.
now traders are expecting more than 70% chance of a 50 basis point hike in March.
Yeah. I think that's gonna increase later on when, we have more economic data come out.
Yeah, I think this report, I mean this news article is published this morning, so later we can go to we'll go to the latest figure and we can talk about it further, right? And
Sure,
then
sure.
calculate the desire to invest during this time, mm, and yeah, and the Feds are not considering changing the 2% inflation target, and the job market does not suggest economic downturn is close, right? So we're talking about the inverted yield
Yeah.
curve, and there might be an economic downturn, but labor market is strong, you know, and
Yeah.
economic downturn is unlikely. So they're not willing to bow the budge, and yeah, then I think hiking interest rate further, or setting investors I would say investors expectation, I think it's the right thing to do, right?
Yeah.
Right.
Yeah. Absolutely, man.
Because we are talking about terminal interest rate towards the Q3 or Q4 of 2023, so I think it's still early, but I think
Hmm.
it's good to set the expectation right now, right?
Yeah.
Yeah.
That's right, man.
And we also mentioned about the non-farm payroll last in January came in 517,000 versus 200,000 expectation. So labor market is really strong right now. And yeah, and just came in, right? S&P 500 could plunge to 3,200 in the coming months, and JP Morgan wants after Powell's speech. This is the one that came in I think 10 minutes ago. So right now, in December, FOMC expecting around a 5.1% terminal rate, and the current market is pricing around 5.5 to 4.75 after Powell's speech, right?
Yeah. Yeah.
I think it could be possible, but sometimes I'm really skeptical whenever those investment banks come out with their forecast. I
Yeah.
it's it's it's
Suspicious.
it's very suspicious. It's like it could be a very good time for them to buy when people are selling.
It's always counterintuitive a lot
Right,
of times.
yeah,
Yeah.
but sometimes it's better to be safe than sorry, right? because
Yeah.
because most investment banks or bigger banks, they have their own models that it could be accurate because it has been there for back tested for
Yeah.
many
I'm
years.
actually very also I kind of very agree with you because you know this piece of article, this piece of news is actually depicting a story, created by JP Morgan because they're selling the news, selling the story to
Right,
retailers and also other investors. S&P 500 could plunge to 3,200 in coming months.
right,
That definitely, FUD, right?
yes,
you know, but what if it turns out to be true?
correct.
If they really high 50, but I think that's already priced half of the. I think that's partly priced in, right?
I
Because if we
Yeah,
look at the chart, if we look at the chart, let's look at Bitcoin's chart, right?
okay.
Let me just switch to
I can
trading view. Okay.
I think I can you can use yours, right?
Yeah, yeah. I can
Okay,
use mine.
yep.
So wait a minute. I'm switching. You see my chart here. And we didn't really have a very strong dip. Not very a big not a big setup, right? I remember it's this doji candle. So it happened here. So
Yeah,
this at this time, right? This time,
yes,
okay? This time. Uh I'm still very skeptical of the price action here because, uh, I suppose once Jerome Powell delivered his speech and then market would plummet to, at least breaking its previous support and then all the way down to maybe 21K. And then we have some strong support there, I think, somewhere around this area, somewhere around there.
Mm-hmm.
And
Right.
then, but now price now consolidating or somewhere along here. I think that actually gave me a sense that market might have already priced in what Jerome Powell said. Actually, the information has already been priced in. So, um, right now we don't have any further information about the FOMC decision. So I think we might be trading in a range before any news coming out. I think the range might be, somewhere around, I'll say here,
To
here,
around,
until here. Yeah.
I
We
think
might be trading choppy sideways here.
yes, correct.
Yeah.
I think if it were to be trading upwards, right, it might be at around the 23.5 to 22.8 thousand.
Yeah.
Yeah.
Yeah. I get you. Because you see, we have a very huge gap here. I think we
Yeah.
might have to fill the gap somewhere around there, and then we'll see how price develops there. That's, not financial advice, so just
Yeah.
my personal opinion towards, you know, very analytical, not financial advice.
Yeah.
And what do we have tonight, man? We
Okay.
also have another speech that
Yes.
Chair Powell has taught.
Yeah.
Did he just said yesterday, and then we're gonna have another one today? I think yeah, man.
I think.
Two.
Hmm.
May-
I
Maybe
think.
we'll have to wait for 10th March,
Yes.
where we will have the unemployment rate and also non-farm payrolls.
Mm-hmm.
There will be the very strong confirmation whether the Fed will, do a 50 or 25.
Yes. I think the most important data for today will be the ADP jobs report, right?
Okay.
Just let me
Yeah.
share my screen for that.
Sure. Let me stop sharing.
Okay. Uh,
Yeah.
okay. This is for this last week's data. So for this, okay. So this week's data
Mm-hmm.
that just came in. So ADP non-farm employment change for February came in higher than forecast, right?
Yeah.
242K versus 200K.
Yeah.
So this means that the labor market is strong right now.
Yeah. It's strong.
Yeah, it's really strong. And tonight there's a Jerome Powell testimonial again after
Okay.
yesterday
Again,
again.
I think that 2 hours later,
Yes, this is in around
Singapore time 11.
2 hours time, right? And then
Yeah.
another one is jobs job openings for January. This one is, I think this data is important, but the data is always within around 10 million range, and
Yeah.
previous came in 11 million against I think expectation of around 10 to 10.5, so it's also above uh, their expectation. So we are seeing ADP that's higher, jobs opening maybe higher as well. So US labor market is strong, hence Jerome Powell feels that there's still room for them to hike rates further, right? And
Yeah.
then for
Yeah.
Thursday, initial jobless claim, that's the weekly data, uh, and this one I think is still, I think it will be within expectation. There will be much movement given how strong the labor market is. And then the most important data will be on Friday, which is the non-farm payroll, the hourly earnings,
Yeah. Yeah.
as well as the unemployment rate. So there will be three important data that's coming on Friday. So I think the market will be volatile for either for today as well as for Friday, right? Because Thursday there's not much,
Yeah,
data is
definitely.
coming out. Yeah. And,
Yeah.
yeah. And I think
All right.
we should recap for last week as well. I think last week for a strong DXY was due to the Eurozone as well, because uh, uh, Eurozone, I mean, DXY is strong, but it didn't shoot up so much. After all the hawkish data was also due to Eurozone's CPI, which came in slightly hotter than expected. Which we talked about it last week as well, that it should be following the US data, right, Johnny?
Yeah, man. Yeah, I
Yeah,
just muted. Sorry.
yeah, it's alright. And then yeah, I think for last week is mostly quite, I would say, calm. The market was quite calm, but I think moving forward, as what we mentioned previously, the market will be volatile, leading to the next FOMC. I think, which is on, I think it's on 22nd, right?
Yeah. Yeah.
So, okay, moving on. Joy, do you have anything to add?
Yeah, yeah. I mean, later I want to talk about, some metrics that I'm using to evaluate Bitcoin's trend and also have a bi-weekly market report to share with you guys. So
Hmm.
let's wrap it up here.
Okay, so I think this is the chart that we have always been seeing. So right now, um, the market expecting um, 22% expecting a 25 basis point hike, and then
O- Only 22%.
only 22%. But I think
Yeah.
why I think the Feds, I think market is expecting, like, okay, the Feds mentioned higher terminal rate, but it didn't say
Uh,
you increase the pace of hiking rates, right? So
yeah.
they may infer that, okay, maybe the Feds might have, currently they're pricing in 225 basis point hike, right? So they might price in like 325 basis point hike rather than a 50 or 20, 50 then 25. You know what I mean?
Yeah. I mean, I know. Yeah. Got it, man.
Yeah, so I think that is better for the market, and I think the Feds can work with that. But right now, almost 78% or 80% of the market is pricing in a 50 basis
50.
point high right now, right?
Yeah.
So
Yeah.
yeah, mm, I think, right. It's like, I find it really funny is, uh, we all know that hiking rates is not good for the market, like for risky assets especially, right? So
Yeah.
when the Feds were to hike, was like, they're fanning the market that, okay, they're gonna hike 50 basis point, right? And then um, the market is pricing, like currently 80% of a 50 basis point rate hike. And then when, during FOMC meeting, after that, results came out, and then they hiked a 25 basis point hike, 25 basis point, and then the market rally. It's it's
Yeah.
it's like, it's very, for me, it's, hiking rate is really not good. Why would the market rally, when, it's 25 versus a 50, right?
You know, we still got a way to pump the market. That's crypto.
Yeah. Yeah.
Right.
Okay, so this is what the market is expecting. Here, yeah, previously, just last week, about 70% is the pricing a 25 basis point, and then 30 is pricing 50 basis point high, right? And
Yeah.
right now it's like, it's the other way. You know, the market actually flipped. More than 70 is pricing a 50 basis point high. So it's really a risk off sentiment right now.
Yeah. Definitely, man.
Yeah. And then when now we move on to the yield
Yeah. I
curve.
think we can share it. Yeah. Yeah. You go first, man.
Yes,
Let's go
yield
ahead.
curve right now 10 years is around 4%. 2 years, 10 years spread is around 100 basis point. So right now, I think you know the 6 months treasury uh, jumped to 5.26%, right? Highest, I think it is the highest ever really, right? I think it just pumped all the way up, and
Yeah.
still
DXY
mm,
also pumped as well.
yes. So I think we have enough for this, and then DXY. So after yesterday's speech, right? So DXY just pumped from I think around 104.5 or 104.2 all the way up to 105.6. So we are seeing a slight uptrend in DXY right now, right? So I think moving forward, um, you know, the markets might be choppy as well. And if we look at Nasdaq futures, uh, we are still in the uptrend, right? It's slight uptrend. However, this uh, the price actually broke the 200 moving average, right? So it
Yeah.
might not be good, right? I think that this is one of the reasons why uh, maybe JP Morgan saw the chart and decided to price it at 3200 for S&P 500.
Yeah. But
Yeah,
that must have been the 200, 200 days moving average, right? Or 200 hours, 204 hours moving average on 4 hour
yeah,
time frame.
yeah.
Yeah.
But if you look back, S&P has never dropped to 3200 for a long time until since what since COVID times, which is like September 2020,
Yeah.
right? At this point, I think it's not really possible, right, Johnny?
Hold up, man. I don't know because I think most of the time stocks and also other I would say other speculative assets, including stocks, they are driven by animal spirit. So when things turn ugly, the FUD, fear, all of that, when we have all of them together, things can go south really quickly.
Yeah,
Capitulation.
yeah. Even if you look at VIX right now, VIX is at only 16, only 19, almost 20. It's not very high, right?
Yeah,
It could be worse.
yeah, could be worse.
Yeah, it could be worse. When I used to trade VIX last time. Um,
Really?
yeah, it's quite profitable to be honest. Yeah, it's like please, this is not financial advice,
Yeah.
guys. If you're in listening to me, I used to whenever VIX dip to around 16.5, I'll just
Okay, you're gonna
buy
buy
buy the VIX future. But the problem is, when are you going to take profit?
when stocks crash.
Yeah. Sometimes you might think that, okay, I might take profit at 25.
Hmm.
It take 25 because the thing about trading fixed, my strategy was because it's futures, so every tick is 1000 US dollars. So however, if because you buy this future, right, every month you have to, because the future expire, you have to buy again. So every month it costs you around 1000 USD to actually hold this future, because the cost of carry and interest rate and stuff like that. So it costs around $1000. So
I see.
you have to buy every month diligently, so that you need a black swan event to actually get a huge payout. So the problem lies is when you don't know how many times this is gonna happen within a year, and at
Yeah.
what price
Yeah.
you should take profit at. And
Yeah.
if you were like you were very risk averse and you want to get a quick cash out when it hits 25, it only covers you the cost for half a year, right? And what if the whole year, maybe the whole of this year, 2023, VIX never broke 20, and you may make a loss for the rest, the next 12 months, which is 12,000 US dollars. Yeah,
I see.
yeah.
I never trade VIX futures. I only trade forex and also cryptos. I'm very familiar with this thing.
Yeah, I think maybe you can consider this as well. It's quite interesting.
Yeah,
Payout will be good. It's good, especially when COVID happens. If you were to
yeah.
buy, you buy at 16, right? You buy at 16, and
Mhm.
you have a very huge appetite, and you manage to take profit maybe at 17, right? That is like a 50.
Looks like a meme coin.
Yeah, and you get a 54,000 payout or more $1,000 investment. This is something that I think a lot of
Yeah,
big investment banks, they are doing it as well. Which
yeah,
it could be easy money, but in the long run, if you do it diligently, the payout will be good. This
yeah. No financial advice though.
Yeah, this is not financial advice, guys. Yeah, I think that's all for my part. Yep.
Okay, yeah. So in the remaining time, I'm gonna share the Huobi Research biweekly market report, and it's actually retrievable on Huobi Research. You just type research.huobi.com, and then you go to articles, and then you find the biweekly Bitcoin market report, and then I think it's pretty good for analyzing trend, especially if you're a trend trader. Okay, so the summary for February is, you know, Bitcoin's price entered a consolidation phase, and multiple indicators were suggesting the period in February was actually distribution because we just had the rejection from the 200 weeks moving average. We talked about that in the previous episode, and also the SSR indicator. I'll cover that later. So it's actually a stable coin supply ratio. It's a proxy measuring stablecoin purchasing power with regards to Bitcoin's market cap, and that's really useful. And I'll maybe explain a little bit more later. So we also have CVD divergence, and also rising treasury yields, and also the inverted RLP indicator turning downwards. So all of these indicators were suggesting that the consolidation phase in February was actually more likely a distribution instead of reaccumulation or something. So we just get to the price model. It's very obvious that we just touched the 200 weeks moving average for the first time because we haven't really spent Bitcoin's price never haven't, we tested the 200 weeks moving average from below to above. And that's actually a pretty huge resistance area there. And that's one of the bearish indicator. And the second one is SSR. Yeah, it flashed twice in late January, also February. It's actually a metric that can be understood as a proxy for supply and demand mechanics between Bitcoin and US dollar. Because if there is a lot of stable coin available on the market, and then you can think about people can actually pump Bitcoin's price pretty easily, right? So
Yeah.
vice versa. Yeah, vice versa. So it's actually bearish if it flashed twice because we haven't really seen it flashing twice in previous cycles. And we're gonna update it in later in later editions. In March edition, we're gonna also put this indicator into the biweekly Bitcoin market report so you guys can keep track of this indicator. It's very useful. So we also have some definitions about the metrics and also some uh, terms, explanation of terms. And then the other one is actually the CBD. I think we talked about it pretty often in previous episodes. So in January, we talked about the pump was initiated by whales on Binance because you could see the BUSD trading pair to BTC, just drove for the price. Yeah, it's pretty obvious. And then since Bitcoin's price reached 23K, and then all of the trading pairs, the CBD was going down, which means that we are definitely in a distribution phase where there were actually a lot of aggressive sellers market executing their orders into the bid, and that's actually not a not a sign of accumulation, because if it's accumulation, we will expect strong bidding and also strong CVD, uptrend in CVD, rising CVD, because we will expect a lot of demand, just uh, market buy executions. But we ain't seeing here in January, also February, which suggests that it's pretty obvious a distribution instead of in accumulation. That's a really useful indicator. It's actually available on uh, Coinlines, and we are also going to update this every 2 weeks in our market report, so to keep you guys updated. Yeah, we'll also have the inverted RP indicator. That's been pretty accurate, I would say, because since February has been lying flat, and then in late February, right before, you could see very clearly, right before, it's actually making a divergence with Bitcoin, also Ethereum's price, and which is pretty, bearish in my opinion.
Yeah.
That's really a strong indication to, a potential pullback in the market. Yeah,
Yeah,
and
because
it has been, yeah.
we have already
Go ahead, man.
seen like this Nasdaq, which is the one in green, has already like pulled back already, right?
Yeah,
Yeah.
yeah, you're right. You're
So
right.
you know that there's I think there's two cases where we might see BTC and Ethereum may not follow this as closely as Nasdaq, but maybe it may be lagged in some way. So we I think we still have to monitor this, right?
Yeah, we're gonna keep you guys updated in later editions. You can check it in our Bitcoin market reports. It's very useful. So that's it for the biweekly Bitcoin market report. If you want to, delve in details, go to Huobi Research and click articles. Again, you can find it down there.
Okay.
Okay. So another thing before we end this episode, I want to share with you guys the metrics that I'm now working on. Uh, it's actually a piece of information, including the top five stablecoin circulating supply, and also all of stablecoin available on exchange. So the exchange balance of all stablecoins. And then the orange line, brown line, we have Bitcoin and also Ethereum market cap aggregate. So I just add Bitcoin and also Ethereum's market cap together, and we have the orange line. And then below line, we have all of the stablecoin, not all, I mean top five: USDT, USDC, BUSD, DAI, and also TUSD. Actually, I would like to exclude DAI because it's backed by Ethereum, right? So uh, yeah, let's see. I'm gonna refine this indicator later on, but this is the initial model, and I would say it's looking good. And the takeaway here is that since March, we have been seeing, we actually see the total circulating supply of top five stablecoin on decline, which is actually not a good thing in crypto, because if we want to see prices going up, we want to see prices of different coins going up, we actually will have to see an influx of stable coins, just like what we saw in 2020, right? That's pretty obvious you know, when we have a strong uptrend and then we want to see more people coming in, driving up prices, driving up the market cap. We have to see more stable coins deployed on the blockchain, people cashing in, you know, uh, that's what we want to see. Definitely we're in a bear market right now. So this is actually a very useful indicator to confirm if things are turning good, turning well, right? If the blue line, if we see an influx of circulating supply, more minting of BUSD, USDC, USD. Oh, no, sorry, we can't mint BUSD anymore due to the lawsuit faced by Paxos. So yeah, we have to see a strong influx of stablecoin, more circulating supply. That which means that more purchasing power, right?
From this graph, I would see that compared to all stable coins, actually, not much has changed. We see a downtrend in stable coin, the amount of stable coin, but
Yeah,
there's not like major, maybe stable coins drop to what we expect when the Feds, or when most major central banks do, uh, I mean, execute a monetary policy to suck out liquidity from the market. So
Yeah.
from what I see is, there's still liquidity in on chain or in the exchange, but I think they are just lying somewhere waiting, you know, for
Yeah.
for the next bull run,
Yeah.
because from
Yeah.
what I see is there's not, from the loss in market cap for a lot of projects, uh, uh, price movements, the amount of, like, the bear during this bear market especially, there's I think there's still liquidity out there, but these stable coins are parked somewhere, and they are not touching it. No money is invested uh, in projects, hence we don't see a very big movement, right?
Yeah. That's right, man.
Yeah.
Let's see if we can, modify this metrics, and then we're gonna put this into the biweekly Bitcoin market report, and that will be helpful for you guys to analyze the Bitcoin strength. Yeah, and that's it. Yeah, that's all I want to share today.
Okay.
And then
I got
let's
one
see.
last thing to share.
Yeah, sure. Go ahead.
So,
We
uh,
have some news about Huobi.
yeah, some marketing stuff that,
New listing? Do we have some new listing?
yeah, for this week. Okay, just for this week, Vote Inu, the meme coin,
Mm-hmm.
is listing on in 5 days time. So for viewers out there, if you want to you want to trade uh, vote deposits are open already, so you can deposit into this into our
Yeah.
hobby, the vote address. This is not the vote address. This is uh, the project address. So please don't deposit into this. Yeah. And other
Yeah.
listings that this week was TrueFi. TrueFi was listed
Mm-hmm.
on I think on Monday, so you can trade TrueFi already. And we are for other listings, we are still looking at some projects that are have good potentials, and uh, I think there's some traction in the market. So please keep a lookout under new coin listing in the next maybe 1 to 2 weeks. There will be
Mm-hmm.
more addition. But for this week, I
Yeah.
think it's more quiet for our side. However, for last week, from here you can see that so many of this that was listed, like uh, artificial liquid finance, Dust Network, Synapse,
Yeah.
Radiant Capital, all this, AGIX as well. No, these coins are still actively traded, and transaction volume are still high on Huobi. So, to support our, our exchange. And next
Yeah.
is on there's limited time offer for membership level up for Huobi Earn users. So, if you have a higher membership, you get a higher APY for our Earn products. So, it might be a good time to buy HT as well.
Yeah.
Yeah. And other one will be this Ethereum Shanghai upgrade, which is happening at the end of this month. So there's 15,000 USDT price pool, and participating projects will be Ethereum, SSB, Rocket Pool, Lido, ANKR, Yen Finance, and the FIS. So um, for winners, first place will get around 1,000 US dollar USDT, and others will be will share the other price pool. Yeah, the risk of 9.8 thousand USDT. So this is a trading competition we have featuring the Shanghai upgrade for Ethereum. So this,
Okay.
yeah, for the LSD, which is I would say liquidity staking derivatives. I think
Yeah.
yeah, I think that's all for today, and also most importantly, in support for our USDD stablecoin. Uh, Not our USDD stablecoin, but USDD stablecoins. So promotion for Bonk USDD and FUD USDD trading pairs. We have 0% trading fees. So if you wish to get some exposure in bond and FUD, which is FUD is a FTX debt. So if you wish to have some exposure in FTX debt, you can you know trade this yeah, USDD trading pair, so to get exposure. Yeah, that's all for me. Yep,
Thank you, Ben.
yep,
Yeah, thanks for covering the news. And yeah, I think that's all for today. Pretty
yep,
good to talk to you, Ben, and hopefully see you next week.
yeah. See you guys next week, and
Yeah,
thanks Johnny for
because
hosting with me as well. Have a good evening, everybody.
yeah,
And for those out there
yeah.
who are
Have a good
free,
day.
later, please take note on Joel's power testimony as well. Yeah,
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 gotta pay attention to that.
yes.
Yeah.
All right. Have a
See
good
you
evening. See you,
guys.
night.